So it started with the Fed announcement last week, and the rally just kept on going. Were you expecting this?
Well, you never know when and know the timing. Certainly, things probably got a little carried away. The 2 weeks prior to the Fed announcement, markets were down substantially, and everybody was worried about we're going to close out the year on a bad note. And that came despite the fact that the economic news out of the U.S. in particular was spectacular. I mean, we had one of the best retail sales reports in history announced, and the market still went down. What seemed to stop it is when the oil prices stopped going down and we're no longer in a free fall, combined with the fact that the Fed seemed to indicate that they weren't in any rush to raise interest rates. And that was really kind of all it took. And really the economic news since the Fed announcement has also been really quite positive. So that certainly helped things along with some of the normal seasonality and light trading we see at the end of the year.
All right, let's talk GDP. The economy grew at its fastest pace in 11 years. Is this a clear sign that the economy has shifted into high gear?
I don't think I'd really say it's shifted into high gear. We've had a couple of really good quarters. But keep in mind, it was helped by the fact that we were actually down in the first quarter. So some of that is bounce back. But clearly some of it is because the consumers are finally feeling confident enough to spend some more money. And I think, yes, maybe we could step up the economic outlook just a little bit for the year ahead. Although I do caution that housing is still in the doldrums, that business spending doesn't look so hot, and imports and exports won't be the most wonderful thing next year. So I'm not one of these people that say, oh, it's 4 or 5% forever from here on out. No, I think we'll be back under 3% here in the fourth quarter.
All right, let's talk about the fundamentals here. Do you think they're in place to support a rally through the rest of the year and into 2015?
Well, it's always a tough call, but basically I think we're in a decent position. I mean, next year the thought is that S&P earnings will probably grow about 8 to 10%. The market certainly probably isn't cheap here. We at Morningstar here, based on price to fair value estimates, believe that we're just a smidge overvalued, maybe a couple percent on the market. But on the other hand, earnings next year should grow 8 to 10%. So that should suggest that the market could grow 8 to 10% next year as well. So no skyrocket, no 30% grower, but given a relatively strong economy, a good backdrop, a lack of alternatives, I think next year could be a good year.